Of course, so much is happening. We're talking about commodities now, and I'm being joined on the program by Opeyemi Oguntade, who is an economic research analyst with Financial Derivatives Company. Good morning to you, Opeyemi. Thank you so much for joining me on the program.
Always a pleasure.
So it's been a very challenging period for Nigerians who've had to grapple with rising food costs and unfavorable economic conditions. Give us a sense of where agri-commodities are in terms of where the prices are.
Okay, so right now in the market, what we're seeing is that the prices of perishable food items are increasing, specifically pepper, onions, yam flour, that's eligible. We've seen price of pepper for a basket now is between 17,000 to 20,000 naira for a basket. And we've also seen eligible going up to about 78,000 naira for a 50 kg bag. And what we've seen is that the reason why we're seeing an increase in these prices is because farmers are trying to ensure that they adopt prices that are able to cover their cost of living, given the exchange rate pass-through, what the impact that this has had on the budget constraint of consumers. Also, what we're seeing in the market is the price of rice has increased again. It's now between the range of 19,000 to 21,000 naira, even though we've seen that the government has said that they expect the price of a bag of rice to crash in November. Right before the festive season, we're still seeing the price of this particular commodity increasing in the market. Also, what we've seen this week is that there was a bit of a conflict of signals from the customs with respect to importation of rice. Initially, there were a lot of online platforms that carried the news that the customs have lifted the ban on the importation of rice, and then a day or two after that came out, we saw that the customs came out and they reiterated that the ban of rice is still in place, and they even went further to advocate for the complete ban of rice importation in 2017. So it's a bit of conflicting signals there, but at this moment, the ban on the importation of rice is still in place, and we are seeing prices of rice is still going up to about 21,000 naira. And with respect to the government's comment on the price of rice going down, with respect to the minister's comment on the price of rice going down in the month of November, it's a bit skeptical because the festive seasons are approaching, and we know the demand for rice usually increase around this period.
But the demand for rice could easily be curbed because, of course, we grow rice here in Nigeria.
Yes.
And one of the breakout sessions at the just concluded Nigeria Economic Summit, Made in Nigeria, with the theme actually focused on growing what we eat and eating what we grow. And if we're spending almost 20 billion naira on several food items, including rice, to import rice, why do you think we shouldn't be looking inwards and actually consuming the rice? We've had this conversation before.
Yes, we have.
And one of the challenges I know that was actually talked about even at the summit was the fact that most of this rice grown in Nigeria has it's not properly milled, so it has a lot of dirt, and it's not particularly doesn't smell nice. So there's a challenge of ensuring that the value chain that makes this rice fit for consumption is still not where it should be. What do you think?
Well, first off, before I respond, I'll go straight into your question. If you're looking at the figures, Nigeria's demand, consumption demand for rice is at 6.3 million tons, and production is about 2.3 million. Even forgetting the fact that this produce, so to speak, isn't exactly palatable to the consumers' preference. At that, in terms of improving the quality of these products, we know the government has doing a lot with respect to even international investors. There's been a lot of investment in that regard. I know a couple of months back there was a Japanese firm that came into Nigeria to promote the production of drought-resistant rice, and there's also been a lot of improvements in quality because local manufacturers have realized that there's a certain kind of preference that consumers have towards rice, so they're shifting towards that preference, so to speak. But looking at it in the short term, the speed at which or the pace at which they'll be able to achieve consumer preference, it's not something that can be done in 3 months or 6 months.
And even though when you do it, the price is always still a little more higher than the imported rice. And so everybody says, why do I have to pay so much to buy the locally produced rice when I can pay less and buy an imported bag of rice?
Well, at this point, local rice is actually a bit cheaper than the imported rice because of, what we have with the exchange rate pass-through. And then we also know that there's been a ban on the importation of rice, which has made it pretty much difficult for importers to bring in this product, as well as the import duties that are placed on this product. But regardless of that, we've seen the price of local rice going up, and this is largely due to the fact that the cost of living of these farmers are going up because of the exchange rate pass-through that is happening across board for all citizens. And so obviously they have to adopt a price that would be able to cover their cost of living. And the reason why we're seeing the increase in price of locally produced rice. Also, given the fact that there's a lot that has to go into place in terms of refining the rice and also mechanization of production to ensure that you're producing in mass quantities. All this taken together would obviously come into the price of rice in the market.
Imported food items was actually one of the contributing factors to where we saw inflation figures for the month of August.
Yes.
Now, headline inflation rates have been on the rise steadily since the beginning of the year. Your projection for September is that the number will trend upward.
Yes, to 18%.
What will likely drive it? Is it still imported food items? Is it the core sub-index? What will likely drive inflation figures?
For the month of September, it's definitely still going to have to boil down to imported inflation. We know that the exchange rate at the parallel market went down to an all-time low of 490 naira to a dollar in intraday trading before it appreciated back to about 475. So looking at that, for one, we know that 41 items are still in place, and Nigeria is a highly import-dependent country. So for that reason, we'll still see imported inflation playing into the inflation figures for the month of September. But looking at other items that contribute to inflation, liquid fuel, we've seen that liquid fuel prices have remained relatively stable. We didn't see any spike in the price of kerosene or diesel or PMS. So in that regard, we still think that their contribution or their weight towards higher inflation would be tapered down in the month of September, but mostly we would see a lot of imported inflation contributing to the numbers.
Now, it is said that in a recession, there are opportunities to create wealth.
Yes.
Now, the federal government has indicated plans to buy food from local farmers to stabilize rising food prices. Do the farmers have the capacity to meet demand for food, especially in line with this new agenda that the federal government has? Let's eat what we grow. So do you think that farmers can actually meet the demand of over 160 million Nigerians?
Well, in the short term, no. But in the long term, obviously with the introduction of mechanization into farming and ensuring that we produce what we're producing is in bulk as opposed to smaller quantities, then yes, we would see that the farmers will be able to meet domestic demand. But in the short term, within the space of 6 months to 9 months, we don't see that happening. But over time, we should see that happening. And with respect to your comments on the federal government trying to purchasing products from the farmers to stabilize prices, this is one of the strategies that most governments most governments in the global markets, so to speak, always adopt this strategy to ensure that prices remain fairly stable. So what they do is essentially buy goods when the prices are low, and then when we're seeing that prices are skyrocketing in the market due to off-season periods, because during the harvest season there's usually an oversupply of a certain commodity, so to speak. But then when you get to the off-season period, we find out that the supply is thinning out, and we see that prices are going up. So what the government is trying to do here is purchase it during harvest season, and then trying to make sure that they sell these commodities at the point when prices are trying to, increase. So the supply from the government comes into the market and helps to reduce the pressure in the market.
So what's your outlook for the market as regards food crops like wheat, corn, and sugar? These three actually make up some of the foods that we actually ingest.
For sugar is imported. We know that Nigeria's production relative to demand there's a wide gap between production and consumption demand. So majority of what we consume is actually imported, and obviously the exchange rate pass-through is going to reflect on that commodity. So going forward for sugar, we expect prices to increase. Even looking at the global markets, sugar prices is one of the commodities that has been increasing over time. It has maintained a persistent increase for the past 3 months, and so sugar prices will definitely increase. For the price of wheat and flour, We've seen that last week prices increased to about 11,000, 11,500 for a 50 kg bag. Going forward, prices are likely to maintain this level. But if we see a further depreciation in the market, then we would see that in the foreign exchange market, then we would see that prices of that commodity would increase as well.
Amy, thank you so much for joining me on the program this morning, and of course giving us your perspectives on where the market is at the moment. Amy Ogutade is an economic research analyst with financial derivatives company. She joins us to share perspectives on the state of the agri-commodities.